For decades, America stood as the cornerstone of global finance, unmatched in economic power and investment dominance. But today that dominance is slipping away. Recession fears are mounting, stock markets are crumbling, and the world is moving forward without the US. Wall Street is watching in alarm as America stumbles. JP Morgan now pegs the chances of a 2025 recession at 40%. But it's consumers who see the warning signs first. Spending just posted its biggest drop in 4 years, and confidence has plunged for 3 months straight, falling 22% since December, a sharper decline than during the COVID crash. Financial stress is mounting. Nearly 1 in 7 Americans now expects to miss a debt payment, the highest level since the pandemic. And it's the poorest households getting hit the hardest. With wages stagnant and inflation eating away at savings, lower-income Americans are running out of options. The irony? This crisis isn't inevitable, it's self-inflicted. Last week, Trump imposed 25% tariffs on imports from Canada, Mexico, China, and the EU. The result? Immediate retaliation. Canada, the EU, and China have slapped tariffs on $79 billion worth of US exports, targeting industries in red states that helped elect Trump. The average American will lose $1,200 per year due to rising prices. Despite February's cooling inflation, tariffs are set to push costs higher again, increasing the risk of stagflation, weak growth combined with rising prices. And when countries retaliate, US exports suffer. Shipments to Mexico and Canada could drop by 60%, hitting farmers, manufacturers, and workers hard. Financial markets are feeling the pain. The S&P 500 has officially entered correction territory, down over 10% from its February peak, wiping $5.3 trillion in value. The Nasdaq has plunged 13.8%, and the Dow just saw its worst week since March 2023. Even tech's Magnificent Seven, once seen as unstoppable, are down 12%, with Tesla collapsing 39% year-to-date, including a 15% single-day plunge on March 10th. Nvidia and Broadcom, each down 15%. Wow. Investors are bailing on US stocks and rushing to safer bets. The bond market is flashing warning signs. Treasury yields are rising as investors brace for stagflation. And with uncertainty at all-time highs, money is flowing out of US markets and into alternative safe havens like gold, which just broke $3,000 an ounce. But here's the real story. The world isn't waiting for America to get its act together. While US markets sink, Europe and China are thriving. Germany's DAX is up 19%, and China's Hang Seng Index has soared 20%, outpacing American stocks by a wide margin. A global capital reallocation is happening. Hedge funds are increasing their exposure to European and Chinese stocks, and Goldman Sachs warns that just a 5% shift away from US equities could trigger a $1 trillion market exodus. For the first time in a century, the US is no longer the center of the financial world. Europe is spending. China is innovating. And America? It's stuck in a self-inflicted downturn. Investors clinging to old ideas about US dominance risk being blindsided. Is this the moment where global power shifts for good? Will America bounce back, or is this the beginning of the end?